Alrighty, welcome everyone. So good to have you with us this evening. Thanks for being flexible. We weren't able to make it happen last night with Dad's computer crashing, but it's Wednesday and we're here, and I'm stoked to see a bunch of your names in the chat over there. So welcome, guys. Tonight's exciting. We have got a really good idea. We've had a lot of Q&A and interaction in the group chat, so we thought let's take tonight. Obviously, we'll open up for Q&A eventually, but right now to start us off, Dad's going to dive into really pulling apart each of the pieces that make up TRENDFORCE. And so we've been paying attention to the kinds of questions that have been showing up, and we believe that after tonight's session, you're going to have the highest amount of clarity you've ever had about what the moving averages are, what causes the signals to go off, when is the best time to actually take a trade. And so we're going to dive into it. So without further ado, Dad, I'm going to find you, I'm going to pin you to the chat, and let's dive into this evening.
All right, so hopefully you can all hear me. Just welcome everyone again.
Clear, let's go.
And you got me loud and clear, Ty? Awesome. Well, welcome. Good evening. And again, apologies from me. I'm a kind of person that hates to postpone, cancel, put off. If I say I'm going to do something, I'll do it. But my computer packed up, hard drive failed. And so fortunately I had backup. So they had to put a new hard drive in, which they did in 48 hours. I got my computer back this afternoon, tested it, and it seems to be all good and all working. That's a relief. So I've been computerless since Monday afternoon. So as Ty said, we're going to give quite a big overview tonight. Maybe a good title for tonight would be how does TRENDFORCE work? So I'm going to come from it from a very different angle. I've turned off most things you'll see when I share my screen in a minute. And I'm going to start in the middle and then work outwards and then add things as I move along. And then hopefully tonight there'll be a lot more clarity. As Ty said, a lot of people have been asking a lot of similar questions, which I fully understand. And when you look at this indicator, there's a lot going on. I know we've trimmed things down quite a bit, but there still is a lot going on. So I thought if I just started off with a few things and then built up slowly and gave good explanation to make a lot more sense. So I'm going to jump straight in and share my screen, Ty, if you would empower me. Hopefully you can see my screen now. Am I coming through?
There we are. Cool.
Okay, so here we are. Let's kick off. So I'm going to come from a slightly different angle tonight. So we're now looking at a very stripped back version of TRENDFORCE. And so, basically, how does TRENDFORCE work? Well, obviously, we chose the name, and of course, that was just the initial name. That could change moving forward, we don't know, but we want to trade with trend and trade with the force of trend. And so I'm going to look at some of the EMAs, which are our trend zones, and then just basically talk about how they work. So all I've got on now is just our buy, sell, and counter trend signals. And then I'm starting off with this trend zone, which is the 233. So all of TRENDFORCE is based on Fibonacci numbers. So you've heard me say that I'm a great fan of Fibonacci numbers, and there's a good reason for that. Price tends to respect moving averages and settings that have Fibonacci numbers. And that is because most of the big money, the banks, the big financial institutions, they've got their algorithms which are largely calculated on Fibonacci numbers. So everything in this indicator is based on Fibonacci numbers to give us an edge. We all need an edge to win, and I trust this indicator will have an edge. And so the first moving average, this is the 233. And so it's obviously a Fibonacci number. So on the 1 minute, it's at 233. But the way this indicator works, it also is the 15-minute trend zone. So if I just opened up, I've already got a spare screen. I've got the 15-minute here. So this is now a full TRENDFORCE, and it's basically a 15-minute. So you can see this is set to the 15-minute. So if I ran my mouse along the 233 on the 1 minute, you will see, if you can look at the 15-minute screen, you will see that my mouse is running through the middle of the 15-minute trading trend zone. So we got the 30 and the 21. And so we want to trade with trends. So the 15-minute is a real key. So we've decided when Ty and I were working together, calculating moving averages strategy, we really felt that the 15-minute would be the key to determine whether we're in an uptrend or a downtrend. So you can see, if you look at the 233 on the 1 minute, we're clearly in a downtrend. It's red, it's green in an uptrend. And so that shows you we're in a downtrend, and that is matched. So on the 15-minute, we can see that's in a downtrend right now, the trend zone. You could also take a shortcut. Here we got a little trend zone box. And we can see that the 15-minute is red, which means downtrend, and likewise the MACD. We got my red color there, 15-minute is red, downtrend. We can see again that supports that we're in a downtrend. And likewise, if we just, let's just go back to this morning. If we look at an uptrend, this is the 233 on the 1 minute moving up. And if you follow on the 15-minute screen, you can see that my mouse is going through the middle. So again, the 15-minute, this is your trend zone, your main trading trend zone, and price is going through the middle based on that. So that is how the basic works, that every moving average on the 1 minute represents a trend zone on a high time frame. So again, if you just look at the indicator over here, and we have got this one shown now, 15-minute trend zone width on M1. So that is basically telling us on the 1 minute, it's the 15-minute trend zone. And you can see under style, I've got that clicked on, green uptrend, red downtrend. So this EMA is a major, major determination of trend. And also, like the algorithm that I've got for this indicator, a lot of the settings are based on this 233 on the 1 minute. So for example, I know someone asked why there wasn't a buy signal the other day when there was one on the 3 minute. The reason was because we only get sell signals when we're below the 233, which is the 15-minute trend zone. And likewise, we will only get buy signals when we're above this 233. And so any other signal that has potential to move will be shown as a counter trend. So here we can see there was a move down. This was, almost 4 o'clock this afternoon. That was 20 pips. That's not a bad little move. But you can see it's counter trend because we're above the 233. And likewise, once prices closes below, there was counter trend because now that closed below, just closed below our 233. And so you won't get any sell signals above, and likewise, you won't get any buy signals below. So that's a major, major determination of how we calculate the buy and sell signals. Then also linked with that, there are a few other signals because it's so important. You can see we got these 3 green triangles here. If you go to the indicator, it tells you what they are. So if you look down under inputs, and you will see, if you scroll down, you've got this M15, which is the EMA 233 trend break signals. Green is triangle up, red triangle down. That's also an important little part of the indicator, important little icon. So it's not a buy or sell signal because I said before, as you can see, price, when it breaks through this zone, this 233, it often retests it. So when you see a green triangle, that means you're back on trend. So all the other trend zones, which I'm going to slowly click on, would be below. So the 1 hour and the 4 hour would be below. So that's telling you that you're back on trend, that price is now above the 15-minute trend, which is the 233. And so again, we chose these, they're multiple, they're about 14. If you went from, say, 5 up, there are 14 Fibonacci moving averages, but some of them would just add noise. So now try to trade with all of them on, and gave Ty a headache. So we've chosen the ones that represent the major trend zones and also the ones that respect price action. So you can see price try to close below the 233, went above, retested it, went above, retested it. Then finally, when it broke above, we got a buy signal. And then price, that wasn't a big trade, we're in range in the afternoon. Still, there was a good 20 pips there. So you can see this is a major determination. Here again, we can see we've got a counter trend signal because we were above. Price broke below and it retested. And once it retested, then it produced a sell signal. So this 233 is a really key part of the strategy. We can see that price will often, when it hits it, it often bounces off. So we can see this was, when was this? This was just after midday today. Price moved down, tested it once, tested it a second time. And after that, we can see, price shot up how many pips? 42 pips. That's quite a big move for a rangy time of the day. So always look, whenever price moves around the 233, there's often a retest. Or if it gets near it, you can see here this morning, this was this morning, around about 7 o'clock, price tried to break through, couldn't, and then of course that shot up. That was quite a big move. So from the 233 up, there was 90 pips there. So if you just in your own time back test and look at how price moves around the 233, you can see here again. Now we've got these red triangles down. Can you see there's 1, 2, 3, 4 of them? So that means at this point, a red triangle downs means we're back on trend. So that means all the other major trend zones, the 1 hour and the 4 hour, would all have been above over there. But you can see again how price, well, if you just look back over here, look, price moves up, kisses the 233, and boom, after that, look, it dropped. There was a lot of pips, dropped about 60 pips down. So whenever price hits this 233, there's always a lot of movement. Here, broke below, went above, broke below, went above, broke below, and it went up and down, trying to decide. Finally, when it broke below, we got a sell signal. And that was early this morning. I know some people are up early trading. They would have closed. There was a good 50 pip drop there, came up, retested. So always look for price action around the 233. And also, you'll see when it's going sideways, like here you can see the 233 is almost running parallel. That is when you get a lot of false signals. Remember, range, always dangerous to trade in range. There's that saying in trading, range of danger. So here we can see the 233 is going sideways. So you're going to get sell, signal, sell, buy, sell. You will get a lot of false signals. And that's why we always look to higher time frames. If we looked at, for example, the 8-minute or 3 times higher, we would have found that most of the signals would not have been qualified by higher time frame. And so again, we can see here price closing below, you're back on trend, back on trend, back on trend, but in range. So those are some of the key elements. Once, of course, price breaks above, it can retest, and then that rocketed up into a huge trade. So the 233 is a major measure of trend, and that's what largely determines our buy and sell signals. So again, we only get buy signals when we're above the 233, and if we look at this afternoon, we only get sell signals once we are below the 233. So again, remember, look for price to test and retest. And so here, a classic example, again, we retested, then we got our sell signal. All right, then the next one I want to bring on is the 987. So let's turn that on. So the 987 is our purple line, which is the 1 hour trend zone. So we can see this purple line here is our 987. Again, a Fibonacci number, and that aligns again with the 1 hour. So if we just opened up a second screen here, that was the 15-minute. And if we change that screen now to the 1 hour, let's just wait for it to reload. We can see that if we look here, if we follow this back, this EMA, the 987, moving back, if you watch the crosshairs on the 1 hour chart, it's roughly moving down the middle. So we can see here, we're in an uptrend. Now this uptrend's been going for a long time back. So of course the 1 hour means every candle is 1 hour. But if we follow this all the way back, you can see on the 1 hour, the crosshair was roughly going down the middle. So whenever we can see that this is moving up. I mean, I could have made it 2 colors, but it would have made the thing far more like a Christmas tree. But that is basically telling you the 1 hour is up. You can see if you just look back at the 987, you can see clearly we're in an uptrend. And so that on the 1 hour, that is then in an uptrend. So the 987 is also huge. All these trend zones, again, they're Fibonacci EMAs, they are massive for support and resistance. So let's just have a look where price may have come back. We can see, here's a good example. We can see here, price try to move up. And what caused price to not break through there was it hit the 987 and went down. Hit it twice, went down, tried to break through 3 times. It tried to break through the 987, but not one of those candles could close above because these are massive for support and resistance. So each time there were buys, but not enough liquidity. Went up, went for more liquidity. Finally, when right down here got enough liquidity. But even again, with all these trend zones, we can see here when price broke the 233, it hit the 987, came back down to the 233, pivoted off that, broke through the 987, came back and retested. So that's a very, if you want to understand price action, that's a really key thing, is that price will always come back and retest these major EMAs. That's why I say we've got them in part of the strategy. And whenever price does reject the EMAs that are trend zones, we see a big move. So here price broke through, retested, and we can see bouncing off the 987. That was this morning, that was 127 pip move. But if you just look back and test, you can see how often price doesn't break through. So if we just go back to, this was around midnight, price tried to break up, couldn't close above, couldn't really close above, rejected it, came down, retested. So always keep an eye. This is the bigger picture of price action, is how price will respect these trend zones. So this is the 1 hour trend zone. Here's a great example. Look here, this was going back to 6 o'clock yesterday evening. The 1 hour trend zone, we can see it's slightly moving. It's in a slight downtrend. But again, look at price trying to break through, couldn't. And often when it rejects that, there's often a big move down. So, I mean, not massive. There's not a lot of volume, but still there was a 60 pip move based on the rejection of the 987, which is the purple. So always be aware that these are key zones for price action. And that's why they're in the strategy. The idea is that they're all in up. But let's just add the last one before we add some more layers to the cake, as it were. So let's add the 4 hour. So now we're going to add the 4 hour, which is the teal color. So the 4 hour trend zone, which is the EMA 2584. So that again is a Fibonacci number. Let's just go back to the big screen. So that's often out of sight. So we can see you can see a slow uptrend. The 2584 doesn't move much. But again, when price gets close to these trend zones, I know there was a great example. I can't remember, was it last Thursday or the Thursday before? I mean, what happened? Price came down, hit the 4 hour teal, went up, came down, hit it again perfectly, made a double bottom. And then after that, price rocketed up. There was a huge trade. I don't know, I can't remember if it was gold or the Dow. But again, sometimes price does go through. But if you just look back, I haven't looked this far back, but if you look back, you will find eventually price would have bounced somewhere off this zone. And once it does, there's often a big move. So we'd have to go back quite far to see when price...
That was Thursday, the 16th of January.
Wow.
And it was gold, and it was a 7,000 pip trade for me.
Wow, okay.
And price still hasn't returned to that level. That's how significant it was when it bounced.
Yeah. But again, look at these for price action. Whenever price gets around these zones, these 1 hour zones, there's always a big move. Now, it's harder to see with the 4 hour. Obviously, if we just pull this back down again, if we just put on the 4 hour here, it won't be as clear on the 4 hour. So we change that to the 4 hour. Let's change it to the 4 hour. Oops, sorry, wrong chart. That was 1 minute. If we change my second screen to the 4 hour, we can see that this line will be round about the trend zone. It's just basically moving over. So you'd have to go quite far back for the uptrend. But that's basically how it works. We won't spend too much time on that. But I think you're getting the idea that these three zones are absolute keys. And so that brings me to our trend zone alignment light. So you will see in the bottom left-hand corner, we have this orange light here. So if you look in the indicator under inputs and you scroll down, you will see there's trend zone alignment lights. So it's these three lights. We've got green, red, and orange. So they're a bit like traffic lights. And so when it's orange, it means that price is between the zones. So right now we can see that price is not all clear. We can see we're below the 233, which is the 15 minute. We're above the 1 hour. We're above the 4 hour. But price is now broken below the 15 minute, the 233. So that's why it's orange. So one of the rules for this, the reason why we put it there is just for a quick glance, especially if you're taking trades off your phone. It's one of the other reasons why I added it to the strategy. It basically, in a quick glance, you can see what the zones are, whether you're aligned or not. You may not see it clearly on a compact phone. But the safe trades, the safe bars are always when that is green. And likewise for sells, safe sells when that is red. So when it's orange, it means you are between the zones and it's not 100% safe. The whole purpose of TRENDFORCE is that we really trade with trend and we wait for these align. So if price broke above now, then we probably would get a green light pretty soon. So these are more, again, these are more the higher time frame. That is equivalent to the 15-minute, the 1 hour, and the 4 hour. And when they line up, that is the safest place to trade. So we can see when they do align nicely, we tend to get bigger moves in price. And the other thing as well, when they are compact, when they often are compacted together, we get a big move up. So when was this move? This was this morning. We can see a little bit of what's this called compression. Whenever these zones compress, there's a big move. And this morning, there was that big move, I think, was at the 120 pips this morning. Yep, that was that big one, over 130 pips. And I almost put it on the feed. The other morning, all these three zones were quite compacted together. I was about to put, there's going to be a big jump up, and it did jump up. So also look for compression of these zones. So when there's a bit of compression, they're not aligned here, but you can see the 1 hour, the 15-minute, they're quite compressed here. Then we can see big moves up. And likewise, when they're compressed for a bearish move, we can see it's not a great example, a little bit of compression there, but still that whole move dropped, 90 pips. So look for compression and then the breakouts that come with those zones. All right, so let's now look at the EMA 55. That's the next layer we're going to add to the strategy. So if we then go settings over here and under style, we can see we're going to pop on the EMA 55. So that is the EMA 55 is the equivalent to the 3-minute trend zone. That's also listed on the inputs. Remember, you can, this here is to adjust the thicknesses. If I put multiple screens, then I tend to make them a little bit thinner. I've thinned them down here because I normally have 3 screens going. So basically, that is the 3-minute trend zone, EMA 55, which is the one I've just clicked on over here. And again, it is a Fibonacci number, and price respects, Fibonacci numbers. And the same principles apply whenever there's compression, you often get a move. So here we can see there's compression between the 3-minute zone and the 15-minute zone. So again, if I split my screen again, and I change this to a 3-minute, it'll just take a while to, let me reset chart. And of course, we are in range, so it's not the best example right now, but I'll just blow the screen up a little bit. Well, let's look for the move this morning. So if we just go back to that bigger move this morning around 8 o'clock. So here we are back. You can see we had a buy signal at 8:23. So if we followed this line up here, there wasn't quite the crossover. Both were trending, but we can see they did cross over. So we can see that the 55 and the 1 minute, if you follow the crosshairs on the 3-minute, it's going through the middle of the 3-minute. So the EMA 55, this trend zone is the 3-minute, and it follows exactly. So that line will neatly bisect those two. And likewise, there was this little move. Where am I looking before? Where am I here? This little move up here, you can see again, it's tracking. And another thing to notice, whenever there's separation, this is the main trend zone, trading trend zone, will come in a minute. But whenever this goes bright green, 55, that's one of the secret sources. That means that is a strong trend, and it means a 3-minute is strong. So you can see when this was going bright green, look at the separation in the trading trend zone in the 3-minute. Likewise over here, bright green, that's radical. Look at the separation between the 13 and the 21, very strong. So again, this is one of the secret sources. When this goes bright green, there's often a good move. So here, this was a bit later. I mean, it was obviously getting near the end of the move up, but bright green, and there was a nice 42 pips there around 933. The other thing I look for that I was going to say, I'm going to give you some of the signals I look for. When you get a buy signal that's sitting right on the 55 there, very close to the 55, you often get very big moves over there. So that's all I really need to say. I think you got the basic pattern. This EMA 55, a fib number, is equivalent to the 3-minute trend zone on the 3-minute chart. So I'll just go back and just look at this chart now. So you can see when these, you really want these, the more these line up, the bigger the move. So when there was a big move, they're not completely aligned. We like to see perfect alignment would mean the 1 hour would be about the 4 hour. But the fact that you've got all these major zones in a line, we'd have a green light there, and we can always see bigger moves. When they're not aligned, then you often are in range, and it's more dangerous to trade. So you can see where price, let's see if I can find an example. I'd probably have to look back too far. But when they're not aligned, you can see price tends to compress. Here, you can see there's good alignment. So with this sell signal here, not perfect because we'd like to see the 55 up there, but still the 1 hour, you've got the 4 hour zone, you got the 1 hour zone, you got the 15-minute zone, you got the 3-minute zone, and boom, we can see there was a nice move down, easy 30 pips. And when they're not aligned, you tend often to see range. So that is really a key part of the strategy, is to really see that these zones are in alignment. And that's when we get the green light for a buy. So at this stage, this light would have been red at this point because we've got perfect alignment of all our trading trend zones. All right, so let's add the final one. So let's just move to this morning. So I've missed out our main zone. So the main zone is what I call the trading trend zone. So that's nestled between the 13, which I'm going to click on. There's our 13 and the 21. And then I like colorful just to see the separation. And so the colorful for that is just at the bottom here. We can see trading trend zone. So this really is your main trend zone. So we can see it's blue for up and this reddish purplish for down. And when you see separation and the lines running parallel, that is a good picture. All right, so we want to see nice parallel lines running for that. And likewise for sells, you want to see the lines running down. So that is a real key, is to get this alignment. And so when we score trades, one of the main ways that we score trades, so remember, Time maybe has popped up our TRENDFORCE rules. We have 4 rules, which give us 5 pips. So when we see a good signal, we want to check that the zones are aligned correctly. So here's a good example. We can see that this was a great signal this morning. And my computer was bust, so I couldn't trade. But look how strong this signal is. So what we've got here, we've got a buy signal. It's bright green for a start. That means strong. Can we see there's already separation? I'd have to blow it up to make it clear. But I'm just trying to make a point here. We can see our zones are nicely separated. So for the immediate trend, we get 1 point. Both the main trading trend zone is separated. And plus, I haven't spoken much about the MACD, but the MACD is also nicely separated. We can also see that we have a triangle up in the oscillator. I'm just not putting all the noise on. Let me just add the rest quickly. I'll add our rockets and our boosts quickly. Under inputs, see me analyzing the signal. We can now look at maybe a few signals. It'll just take a few seconds to load. Let's just see where the boosts were on that trade. We can see that's a great signal. So these are the signals that run. So we've got great alignment on the zones, bright blue. We got the oscillator. Everything is green, bright green, triangle up. Plus we got our boost up. And that thing just ran for miles. Also, when you get a signal, a buy signal, and this would have only got lags 1, that would have only gone bright green on the next candle. But when you get a buy signal and the 55 is bright green for a buy, opposite for a sell, those trades always move. You can see, let's just look at the signal here. So let's just add the 3 minute. We're just going to look now at looking at just how we score based on our trend zones and some of the other little signals. We can see here, so earlier we got a bar signal. So you can see if we try to score this signal, there are a number of things that are wrong. There's some things in their favor. We can see the trend zones on the 1 minute, you get a point there because we've got separation, the main trading trend zone. We can see the blue. Also the MACD looking very bullish. But you can see there are a number of problems. The key part of the strategy, because with every indicator, there are always false signals. You can't get away from them. And so in this case, we have to always look at high time frames. So the key part of the strategy is look to high time frames for confirmation. So I would not have entered at this point because although we have a bar signal on the one, there are a lot of things going for it. If we looked at the same time on the 3 minute, we can see that the trend zone are not aligned. We still got red. And we can see that the 21's a little bit iffy at that point. We'll come back to that next. But both the 3 minute, we're in red on that signal, the MACD and the trading trend zone. I mean, there are some positives. We do have buy momentum. We have rejected a line. We can maybe look at that later. We rejected on the 3 minute, the 987, which is massive. You normally get moves. So, I mean, if you understood price action, there were risks in that. But remember, when there's lack of alignment, there's always a pullback. The key for me here that would have made me nervous is that the zones are not completely aligned. We're below the 55. So we can see that is quite a no-no. And whenever they're not aligned, there's always a retest. So here we can see we had a buy signal. The 3 minute wasn't aligned. We were below the 55, which is really very risky for entering a trade. So we wait for the pullback, and then we look for another signal to re-enter. So here we can see that would have been a good entry. So at that point, so that's why patience always equals pips. And how much this would have, this was a good move here. That was a good 60 pip trade. There's good reason to enter here. We've got a boost. Now remember, these boosts are very powerful. They're as good as buy signals. So in the 1 minute now, we can see there's nice alignment. You can see here, there's separation with the main trading trend zone. We can see we're on the crossover. We've got triangle up. But looking for confirmation now, we can see now things have changed completely on the 3 minute. So this is a 3 minute candle. We can see separation. I would have liked to have seen that dipping more, because often you can get a pullback after that, which we got. So you can see, I mean, I'm already getting to the next thing. So we can see the 21 was pointing down, which means potential pullback. And so we can see we had a pullback. It wasn't too bad because already we can see it's beginning to round out. But just looking at the zones, that would have been your entry on that candle. I wouldn't have taken it there. I would have waited for the 3 minute to come into alignment. And once it became into alignment, then we can see we moved up nicely. All right, so with every signal, we look for all those kinds of things. So trend zone alignment. Then the next is angle. All right, so for this one here, the angle was very good. We can see how the 21 was pointing up. So you definitely got a point for angle. And then in terms of space, let me just add all the pivots now. I've got them on the other line, but just for easy reading. These are all your daily, weekly, monthly, and quarterly levels, which price tends to really respect. We'll just let those boot up. We can see when there's clear space between those pivots, price tends to move quite rapidly. And so we can see here from the buy signal, there was clear space all the way up. There was a pivot here, but you had 57 pips to that pivot and then 86 to that. So there was definitely enough clear space. So you would have got point for space. And also for the signal, that's great. Remember, for signal, it's not just the buy signal. You also want some kind of confirmation. And so that boost gives you good confirmation. And we can see also at the same time, and this is what made this trade very strong. So we analyzed that entry there. We now look at this signal. What made this trade very strong is that whenever you get simultaneous signals on the 1 minute and on the 3 minute, price always tends to move quite strongly. So we can see at the same time there was a buy signal on the 1. There also was a buy signal on the 3. What also made this trade very strong, we can see on that point for the 1 minute signal, we can also see that our oscillator on the 3 minute was bright green. And then what I love with this indicator is once you're in a trade, you're thinking, is this going to move? My heart would have beaten less because we've got a nice rocket too. So the rocket, remember, is when we get a diamond, which is by momentum, at the same time as a boost, then you get a rocket. And then that means price is going to rocket up. And we can see after that signal, boom, price rocketed up 113 pips. So look for combination signals. And so I also wanted to have a look here. I wanted to look at this signal here on the 3 minute, the counter trend, and why this was a good signal. So I'm just going to mix it up a bit just to look at that one counter. So I noticed that counter trend signal this afternoon. So let's just I've changed this to the 3 minute now. And I'm going to change this to the 8 just before I hand back to Ty, just to look at this counter trend signal. We may look at a few other things at this time. So let's look here. Great. So this counter trend signal came at, what time was that counter trend signal? That came at 4 o'clock this afternoon. And now that is a signal I would jump at for a number of reasons. Firstly, this doesn't always happen, but on the candle before, there is a boost down. So that is, remember the boost signals and the diamonds, the red and green diamonds, are as good as sell signals. So there was counter trend. We can see the zones are not aligned. So this has got quite a complicated algorithm. So generally, these will give you some pips. If you only traded the counter trend signals, you'd be a profitable trader. It's crazy, but it's true if you go and back test it. So we've got a boost. We've got the signal close to the 55. We've got separation on the 3 minute. You can see on that signal, there's separation in both the main trading trend zone and also the MACD. But this is the key for the signal. You don't always get this. But at this point, when we got the counter trend signal on the 3 minute, let me just blow it up a bit. Look at the candle. Look at the zones on the 8 minute. We can see there's already the zones already red there. And have a look at the MACD. The MACD has been bearish from way, way before. So we've got great separation. Plus, this doesn't always happen. On that signal, the counter trend signal on the 3 minute, look at this. On the 8 minute, I'm down in the oscillator. The main bar on the oscillator, the main trend bar, bright red, plus you've got triangle down. And generally, I look at the free space. This is the kicker too. I look at the free space, the 233, wherever I'm taking that. And look how from that signal down, I mean, look, we are not at a big volume time of the day, but still 34 pips. That hit right down to the 233 on the 3 minute. That would have made a great signal. So I think I've probably spoken long enough, Ty. I've gone through the main zones and the signals. That's the main thing I wanted to cover tonight, and just looking at some of the scores for the signals, just to reinforce those. So I don't know if there are any questions, but I'll hand back to you now.
Very cool. No questions currently, but maybe they'll fly in a minute. I'll screen share the rules in the meantime, or at least overlay it on the recording later. If you haven't already got it, guys, hopefully you can see that there. But those are the rules that Dad was talking through right there, guys. The trend zone alignment, and then you're getting 2 points for that. 1 for the current time frame, 1 for 3 times higher. The angle, 1 point for the 21 SMA, that being 3 time frames higher. What is the angle of the 21 3 times higher than what you're trading? So if you're on the 1 minute, you need to look at the 3. If you're taking a signal on the 3, look to the 8. If you're taking a signal from the 5, you're going to look at the 15. And then space, is there space for it to move? We already understand that. And then is there a signal near the signal? So not just the buy or sell signal, but is there a white triangle in the oscillator going up or down? Have we got a diamond for momentum? Have we got a boost emoji or a rocket? Or is the 55 turning bright? Those are all of those signal opportunities to see near or around a buy signal. So I'll unshare that. So guys, I don't see any questions. I think everyone is quite quiet and taking that all in. I'm sure that was landing and giving you guys some clarity on some things. Thanks again for being flexible this week and rocking with Wednesday night for us. Means a quick turnaround because we're back here at 5 a.m. tomorrow morning for live market analysis and hopefully some trades. So yeah, I don't see any questions on any of that right now. Drop them in the chat if you have them.
I want to take that as a compliment that people understand what we're saying.
There you go. I feel like it's landing. I mean, not everyone posts in the group chat. A lot of people message me privately, and it's been so encouraging, guys, to see, people making progress, people starting to click. Drew, you got me a little extra excited. You did put that in the group chat. I think it was the other day. You had like 3 wins in a row for 7% last week. I just love seeing that, man. And when things start to click, it just only gets better from there. So guys, keep the mindset strong, keep yourself, this is, let me just unpin Dad for a second so I can have this here. There we go. There we go. Let me just check if that is a question. So much easier than the sum of the other ones we have used. It is so well thought out. Thanks, Elise. Appreciate that. That is, Dad, that is compliments to you right there. But
thanks, Elise. Appreciate that feedback.
Yeah. Something I was chatting with Zeph today, and we're just talking about, how do you get your, here's the thing, guys. Trading is not always the best way to get better at trading. What do I mean by that? Instead of always just getting on the charts and looking for an opportunity to take a trade, or even if it's demo or if it's live, whatever, give yourself some time. Like what Dad did tonight, this is what I was talking about with Zeph today, is go back, turn everything off, maybe just turn on buy signals and a few moving averages just to make it a little less noisy. But what I want to encourage you to do, especially if you're a little more new, maybe not the 1 minute, go on the 3-minute chart. Look at the buy and sell signals that fire off and start to look at when and how many that happen in a day. You're probably going to see 2 good ones during the London session, which is kind of now onwards for our evening in New Zealand. Then you might see a couple during the Asian session, our afternoon in New Zealand, sort of midday onwards. And you'll probably see another 2 or 3 during the New York session, which is our, crazy hour, 2, 3 in the morning onwards. And so when you start to see how many opportunities there are in a day, which are signals that align with the rules, you'll have less FOMO or urgency to click the button when you see a trade, when you see a signal when you're trading. So give yourself, and it'll also really build your belief in the scanner. This is all I've ever done. When Dad sends me an update in the past, and we've been working and developing this over the last 2 years almost, or 18 months ish, I would go back and go back and go back and look at the signal, look at how it performed, look at what it aligned with, look for the magic overlays of, okay, when this happens and this happens, that's when there's a move. And so I want to encourage you to do the same, because when you do that, when you go and back test and look for those things, it's going to build your belief in the scanner so that when you see a signal that follows the rules, you click the button, because it's breaking the rules. Another way to look at it, it goes against your rules to not take a signal that is, say, a 5 out of 5. If you've got all 4 points there, why are you not clicking the button? So to make this mechanical, for the odds to always be in your favor, you have to be taking the good signals and not taking the others. And so to do that, just to build your belief in it, go back and look back and see which ones were the best ones. So that's why I always take screenshots of my winning trades. And like I posted in the chat this morning, the 1, the 3, and the 5, which I'll screen share for a second here so you can see it. But I am familiarizing myself, my brain, with what a good signal looks like. And so this was a counter trend signal, but there were really good things going for it. So let me do this quickly and this, since we've still got some time. So that was my trade this morning. You can see the 1 minute on the right, the 3 in the middle, and the 5 on the left. And so it was counter trend, but again, you've got everything looking good. You've got the zone on the 1 minute, the trend zone on the MACD and above looking good. 3 minute, the zone above and the MACD looks brilliant. And on the 5, it is already shifted on the candle prior. So the zones are all great on the time frames, 1, 3, and 5. Then what happens next? So after the zones, where's my rules go? I want to be able to follow them in order, not just randomly talk. So we've got the zones in alignment, then the angle of the time frame higher of the 21, the 3 minute, it was flat, but it has started to point down. So we're not going against it, it's not pointing up. So we get a point for that. Is there space for this trade to move? Well, there was at least space to the 233, which I know Dow would have had his target on, but I was targeting a little bit lower than that. And so my first initial exit was a 1 to 3. And if you look closely, there's a little, I was targeting the teal 4-hour trend line there. So that's the first little exit. And then the next one was just when I thought that's enough. It's probably going to bounce. And so I closed the trade. And so there was space, not a ton. There was always potentially going to be less trade space on a counter trend move, and the 233 is probably going to be the first thing you're going to bump into. But then aside from space, next thing, signal, we have a counter trend signal and not many other things. So you might not have a whole lot of other things firing around a counter trend signal, but the thing that I could see here was that the 55 was bright red. And so that was enough for me, and bang. So this is why I'm looking at these 3 time frames, and I've compressed them to make it a good photo. They're a little bit wider when they're on my screen normally. But I'm familiarizing my brain with, okay, what's going on here? Price on the 1 minute looked a little bit flat for a while, but the zone on the 3 minute in the middle was still wide and starting to roll. And you'll see this kind of rolling effect often when price there is like wedging on the 1 minute chart under the 55, and then suddenly you start to get that separation. It's a beautiful thing. So I encourage you, get familiar with what the visuals are for trades that move in your favor. Just trying to unshare my screen here. And then from there, you're going to start burning those images into your brain of what to look for, and obviously looking further back to see the build up to that point. And then you'll just become quicker at scoring those trades. So I'm just checking what's going on in the chat. It is the long game. Took me a long. This is Drew. It took me a long time to calm down and stop being excited, if that makes sense. It was finally clicked after 3 years on this journey, bro. So happy for you, man. I mean, at the same time, you have moved from one side of the country to the other and done a whole lot of life with little kids in that journey. But yeah, man, it's just so cool to see. You know, guys getting results. That's the thing. And we've said this right from the get-go. Don't expect to make life-changing money in your first 1 or 2 years of trading, guys. Like, this is an incredible skill, which if you think about, this is how I describe it to most people. No one goes to university for 3 years or 4 years and expects to be making phenomenal money while they're still studying. So giving yourself that grace that you're in this for the long game. So anyways, guys, I will wrap us up with that. We're getting close to 9 o'clock and we have got an early one. So thanks for joining us live tonight. Once again, Dad, thank you for breaking that down so wonderfully. And if you have any questions, drop them in the group chat. Otherwise, we will see you at 5 a.m. for our live market analysis. Hopefully we can score some trades together. In the meantime, enjoy the rest of your evening and we'll see you in the chat. Good night, everyone.